It's another lovely day, and we are back with our podcast. We took a bit of a break. There was a lot happening in the background, a lot of big things, and my colleagues will delve into those big things happening in our next couple of podcasts. Sometimes it's good to take a breather and rewind, take on board all the comments that are coming from the people that have been following us. But we are back, and it's good to be back. Today, we have a special discussion, and this is about taxation. And I'm happy to welcome my two colleagues, Chrispin Daka, Senior Partner at Moore CFS, Zambia. Sidi, how have you been?
Thank you. It's so good to be back. Yeah. We took a break. Now we are back. Now we'll make sure that we keep the momentum. So good to be back. It's a great pleasure. Exciting times.
Thank you, Sidi. And we have a new member of this podcast, and we invite a couple of other people to come in and share a couple of ideas about business. And this is no other than Japhet Tembo, tax partner at Moore CFS, Zambia. Japhet, it's good to see you on the podcast.
Thank you, Reuben. Good to be here and looking forward to the conversation.
Excellent. As usual, the people following us can give us comments on the usual channels that we share at the end of the program. But today's podcast, it's about the trending topic in the business world, and that is withholding VAT. Yes, you heard me right. It's withholding VAT, not withholding tax. I've got two experts to discuss this in detail. Let me first invite Chrispin Daka to just in general sense explain what a withholding tax is, and thereafter get into the details of what is withholding VAT. Chrispin.
All right. No, thank you. Thank you very much, Reuben. Yeah. So this is a system where the ZRA actually appoints an agent to collect the VAT on their behalf. So by law, VAT actually, we are all effectively agents for VAT because whenever we make a taxable supply, as it is called, or a sale which has VAT, that's not our money. We are effectively collecting that money on behalf of ZRA, and we remit it. And in terms of how we do that, JT will go into a lot more detail. Yeah. So now the only difference here is that instead of just making every taxpayer that provides taxable supplies to be a de facto agent for collection of VAT, here when we're using the system of the withholding VAT, it's where now the ZRA appoints specific people to withhold on their behalf and then remit on their behalf. So that's really the difference. So this is more like a specific, it's still the same process. It's still, we are all acting in the same role, but this time they just ask, one aggregator who collects on behalf of all of us or everybody else who has dealt with them. So they are more like an aggregator. They collect and then they send to ZRA. Instead of each individual taxpayer to have remitted, they now just give one aggregator who aggregates everything else and then remits. I think JT will go into much more detail into the, he's the fundi, into the mechanics, the detail of how that actually goes on.
Excellent. Now let's get straight into it, JT. CD has laid a foundation on generally what withholding tax is, specifically in this particular instance, withholding VAT. You are the expert. What is this tax that is trending? What are the mechanics? Who does it apply to? Just give us the context of what withholding VAT is.
Okay, excellent. Thank you, Reuben, and thank you, CD, for that brief background of what withholding VAT is. So just more of a basic background of what withholding VAT is. To start with, for starters, withholding VAT is not a tax, but merely a mechanism of collecting a tax at source. So which tax are we looking at here? As CD had earlier alluded to, that we're primarily in a VAT cycle of transaction. All suppliers of transaction of this particular taxable supplies are merely agents on behalf of ZRA. So what would happen under ordinary transaction? For instance, if I make a supply to you, of goods worth 1,000 kwacha, I would add VAT, which is 160. And since you're the consumer of that VAT, you would pay me the amount inclusive of the VAT. So meaning I would collect about 160 VAT, which then I'm required to remit across, which is the normal practice, which normally happens. But in the given scenario for withholding VAT, which was introduced around 2017, what then the ZRA thought was that the Commissioner General decided then to create another layer of agents whom are more of large taxpayers, which included like mines and other and specialized taxpayers. So what happened under that mechanism was that whenever a supplier transact with these appointed agents, which are added at that layer, what these agents were mandated was to withhold the VAT and then onwards remit across to ZRA. So in the nutshell, that's what ZRA had introduced. So in that process, what would happen is that if I make a supply to, say, a large taxpayer, in this case, I'm looking at a mine. If I'm a supplier to a mine, I supply goods with 2,320 inclusive of VAT. Let's take that the VAT on that component is 320 kwacha. And in that period, I also had, say, my own procurements that I had made in production of that particular product I've sold to the mine. Say maybe it was 1,160 kwacha, which means 160 is the input VAT that I've suffered on my on the consumptions that are brought into my production of that particular good or service. Then what would happen is that I would declare the 320 on the supply I've made to the mine, and also include my 160 kwacha, which I've incurred on the expense that I incurred on the production of that particular service. Then what would happen there is that I will have a 320 minus 160, then I would be required to pay 160 across to ZRA. But then here is what would happen on that particular system is that the mine would have withheld a 320 from that 2,320 total supply of goods that I have made to them. So when they're paying me, they would have paid me 2,000 kwacha with the exclusion of the 320, which then they would remit direct, as opposed to where they would pay me the full invoice, they would pay me net of VAT. And then what was required, or rather the rule that was given to the mine, or that these large taxpayers, was that they were given a deadline when they were supposed to declare that particular transaction, which under normal circumstance, VAT was supposed to be declared by the 16th following the month in which the accounting period, or rather following the month in which the transaction had taken place. So what would happen is that they were given the 16th day to declare that transaction. So when the mine declares that invoice, I would then automatically receive a notification of a certificate. Then what would be required of me then is to amend my return, or rather, if I've not yet filed my return for that period, I would then amend my return. If I have not declared it, if I've not filed the return at a time, I would include that certificate under a schedule. There's a schedule that was also added to me as a supplier under Schedule 16. That's where I would put my detail of the certificate number and the period to which that certificate. So the emphasis here is that what was more key is the period and not the date when the mine made the declaration. So the mine can declare on the 16th, an invoice that would have happened, maybe let's say in June, they can declare maybe on the 16th of August. What was critical is the period that the mine would have indicated. If they've indicated that that invoice relates to a period of June, then I would then come back and amend my June return so that I can account for that. And then, depending with my declaration on that in that given period, if I was in a payable position with the inclusion of that invoice, then I would be in a refundable position. So that would mainly happen in that transaction. Of course, there were some challenges that we'll discuss as we go, but at high level, in terms of what VAT withholding VAT is, that's what would primarily happen in that transaction.
Excellent. Thanks, JT. CD, what immediately comes to my mind is the point that JT made at the very end of what you were saying. And businesses obviously be very concerned about new regulation, new mechanism of paying tax. What did you anticipate would be some of the challenges that small and medium, businesses, including large businesses and suppliers to the mines, will be facing in complying with this new legislation? You can pick it up, CD, or JT, you can pick it up. What are some of the challenges that the business would face in the initial stages of the implementation of this legislation? Yeah, CD.
Okay. Now let me pick it up. So for me, RK, this for me doesn't sit very well in terms of when it comes to business, because it really disturbs the transaction cycle that should go with VAT. So just taking a step back, VAT is a consumption tax, meaning it has to be passed on to the final consumer kind of arrangement. Now, and therefore that's why the mechanism only works if you've got some input, if you've got some output, if you've got output VAT, then you've got some input VAT. You can net off the two and have a net position, which you now pay, okay, which you now remit. In that way, you are, in terms of cash flow impact, it's neutral, because you are effectively getting the cash flow impact immediately, like here and now. Otherwise, if your output is lower than your input, then it means it goes into the refund pool, and therefore that refund has to come from the ZRA. Now, if that refund was happening as the tax was designed, meaning input VAT paid in time, then I've got no issues. But now here the issue is, I incurred some input, which I have claimed, but the whole output. So let's take this scenario. I like sometimes doing examples on extremes, because then you can have, you can see what the real impact is. So if I have sold to the mine,
correct,
my whole output, which like JT said was 320, has been withheld, and I incurred 160. That 300, because that 320, all of it has been withheld. It means it goes as a payment towards my account to ZRA. And on top of that, now I have the 160, which I am again legitimately need to be paid, but it goes into the input pool. Okay? Then of course I will have paid only the difference. But now I have lost the opportunity to offset that 160. Because that 160, if the money had come to me, I would have offset that 160 and given the ZRA the difference. But now they get the whole amount, and then I throw in my input into that. And this input, in terms of refunds, is now the average recovery for most of the clients we are working with is going into 3, 4, some of them even 5 years. We have refunds happening now, which were 2018, 2019. Yeah. So you can see that in terms of the environment in which we are, this is a very big disadvantage cash flow wise. We are actually choking business cash flow wise, because now their input will have nothing to offset against at a cash flow level. They will have nothing to offset against, and this this money just goes into because it goes as a payment towards your account. So it's considered a payment towards your account, and therefore it becomes part of the, your recovery position going forward. So for me, that's where I find this. There are so many other operational things we can look at here. But for me, that's where I really find this extremely anti-business growth, especially for growing businesses. And most of these, we now have good legislation like SI 68, bringing in the issue of bringing the opportunity. But we are now choking the growth because we are affecting the cash flow. Cash flow is being held in VAT receivables. To be honest, I understand why there's and again, this is just my own interpretation, not that it's an official position, but just from my own analysis, I sort of understand why they would have done this. When it comes to the mines, pretty much I would say 100% of their sales are export sales, and therefore they are zero rated. Yeah. So there is no output VAT. So they are always in a claimable position. So therefore the ZRA always has to pay the mines. Now, how would they manage that? I think the only way they can manage is if they can get an aggregation. If the mine can also get some of this, so it helps the mines and it also helps ZRA in terms of their cash flow arrangement related to the VAT scheme, but it disadvantages all the other taxpayers. It disadvantages. So unless the ZRA, so in this case, the ZRA has to come in now and look at two things. And then I think JT will, when he now talks about the detail of the process, he will bring out how some of these issues actually impact. So the key is the ZRA. They also have to come to the table and help facilitate this problem, because there's just one problem here. One problem is the cash flow imbalance that we are introducing in growing businesses. So the same people we want to grow, the same people we want to get more tax from, they are the people we are disadvantaging by doing this. So maybe JT, you can give us, like sort of what is the actual procedure of how you claim these things in the return.
Yeah, I think that's important, CD, like you said. I think understanding the process may also give us an insight of the timelines You know, like you ably explained, you know, the timelines between when you actually get this deduction and when you put in the claim with the ZRA, what timelines are we talking about? Because clearly from the example that you gave, some people have been waiting 3, 4 years. That's a big knock to businesses that are already in a working capital trap kind of an issue. Maybe Jet, you can talk about the process, then we can get into the, you know, what sort of you know, interventions or proposals can we make to the suppliers, or is it ZRA and the mines to make the process, you know, better? Jet, you can talk about the process.
All right, excellent. So before I just get into the processes, and just to add on what CD had mentioned in terms of the mines. So in that process, when it was introduced and subsequently the withholding VAT was suspended last year around July, with a notice was given that effective 1st August 2025, withholding VAT was sort of suspended. And then now we've seen that in the recently this month, should have been last week or so, ZRA made another announcement that they have reintroduced the withholding VAT, and specifically only a few mines have been appointed as agents. So under the previous mechanism, there were a pool of large taxpayers, and I think the major challenge there, as CD has said, for the mines, obviously, what we have seen that, okay, they do most of their sales, they are zero rated, and then obviously their input would come in. But for this other pool for the other pool of large taxpayers, obviously, where most of their suppliers would be local, they would obviously maybe try to manage their exposure. Because remember, when I make a supply to these other suppliers, what would happen is that they'll have a 90-day window within which to claim that particular supply I've made to them. While in my case as a supplier, I'm required to declare that invoice within 30 days from date of receipt. So from date of invoice. So that would create a mismatch, because the supplier, the customer in this case, or the recipient of my service, would hold on to that invoice. Maybe they would want to manage the exposure. If there were a number of invoices to declare in that period input, they would rather maybe spread them across, and then obviously for them, they would also do like a cash flow management kind of a scheme, which primarily happens in business, because you would want to hold on to some invoices and declare them, but within the 90-day period window, because as a recipient of that service, the law provides that you can claim within 90 days from date of invoice. But again, you still have a 16-day period to declare those invoices. So what would happen is that in terms of the process, in my case, I would declare, going back to the example of 320 kwacha as my output, I would declare it under my VAT return, and also bring in my 160 kwacha as input tax. Effectively, I will be 160 to declare close to ZRA. I'm waiting for that invoice, because remember, from the background that I've given is that, let's say the mine or this large taxpayer had decided to hold on to this invoice, and maybe they want to declare it in the other month. So, like in the current scenario where now ZRA has said any invoice issued from 1st June 2026, if you made any supply to the mines like KCM, Mopani, FQM, just to mention, that is public information. That's something I can mention because ZRA has issued that particular position. So then what happens that if you've made a supply to any of these particular mines, the mine, when making this supply, given an example of a 2,320 supply, worth of supply that you've made, they will only pay you 2,000 kwacha, 320 would be withheld. And obviously, when they make a declaration, that's when you have a credit. So what normally happens, the normal procedure is that when you declare the 320 together with your 160, you have 160 to pay. But then here now the issue comes in. We have the tax clearance issue here, and just to bring out the issue that Chrispin was mentioning, that SIS 68 has brought in opportunities, and also to transact with these particular mines, you are required to produce a TCC. If you don't have a tax clearance, and right now a tax clearance is time-based, so if you don't have a valid tax clearance, if I've pushed in a tender today, for instance, and the tax clearance only maybe expires next week, and the tender maybe will close by end of this month, meaning when the bid is being evaluated, when the valuers are looking at the bid, they will see that my tax clearance has expired, despite me having made a submission of my tender on time. But because my tax clearance is showing that it's expiring next week, when it has expired already at a time when they're opening that bid, then it means I'm off. I don't qualify primarily because of that TCC. And also, when I'm making a remittance of these funds, if I'm procuring some products of $2,000 and above, I'm required to have a TCC. If I don't have a valid tax clearance, then the withholding tax of 15% is withheld on that supply, even on the import. If I make an import, if I don't have a valid tax clearance, that's a key concern that comes in, that look, yes, we welcome the move of reintroduction of the withholding VAT. But what the challenge that comes in is that when there's a delay by this particular mine or by this particular agent in declaration, for me, having a legal position that this is my money, I own it, because I need to enjoy the benefit, because that's an incentive that the taxman has given me, that if I procure something, I need to cushion it against if I'm making a supply, I need to cushion it against my purchases that I've made for that period. So meaning I'll be where I was supposed to have paid. If I had received that 320, I would have paid that 320 immediately. So now I'm now being affected from the 2,000 quarter that the mine has paid. Then I'm also removing 160, which has not yet come because this mine has withheld my money. So what then effectively happens is that when now the certificate comes, maybe it's 2 months after, my return will still be showing that I've got a pending liability with the authority. And I may also have some genuine refunds that the taxman will have to process besides the normal refund that is coming as a result of the withholding VAT. So what then the ZRA would do is that for them, they view all the liabilities as is, irrespective of whether it was withheld at source or not. So what then now happens, you have a double tragedy where the mine has withheld the 320, and on my account, because it's showing another 320 which I've paid, had I received that 320 from the mine, effectively, government has taken away again a 320. So they're holding on in total about 640 from my own cash flows, which I should have genuinely gotten this. So that's another metrics that we see that the possibly ZRA should have been considerate about, understand what challenges these other players are going through. Yes, it could have been, it is a genuine obvious move that they've made, but have they looked at it at broad spectrum in terms of what impact is this having on the operation side of things? Because that input, for instance, that I'm claiming from ZRA, there's another person who has made a supply to me, whom I need to pay. But because ZRA has the agent who's acting on behalf of ZRA has withheld that 320, because effective when I receive that 320, I should withhold 320 and then pay 320 to my customer who had supplied me with that. So effectively in the chain, everyone who's involved in that process is affected by just withholding that 320. It might be seen at high level that, no, look, we're basically just getting our money, but it's affecting the whole entire supply chain. So in the nutshell, that's a challenge that we are seeing, that we feel had the taxman been considerate in terms of what's happening, other than the other challenges that others are coming, maybe they're seeing maybe some non-compliance issues where other players are not declaring that invoice. That is given, we understand that position, but we should look at the chain of everyone who's affected in that supply, because I may also have bought those goods on credit. So meaning I have to get from that 2,000 kwacha the mine has given me, I should sort out, despite I'm supposed to pay them that 160, which I've not yet received because ZRA through the agent have withheld. So effectively, I'm at loss in that chain of the process.
Excellent. Yeah, so, excellent. CD, this is,
so
for me,
so
this
for
is
me, actually, you know, like so if the system was to work as it was designed and everybody else, first of all, it's even called a withholding tax agent. So the mine is an agent to who? The mine is an agent to ZRA and not to the taxpayer. But the person who's actually suffering is the taxpayer in a relationship where they've got no control. So for me, the way I see this is that if, yes, it worked as it was designed, where you deal with all the operational controls, then this is okay. For me, I've got no issue. Because the way it should work is this. When you make a supply to a withholding VAT agent, yes, they'll pay you net, they'll withhold the thing, but they need to make sure that by the 16th of the following month, they have claimed that invoice. Because if they claim it, then it triggers a withholding tax certificate, right? Which JT, I think, will explain that it comes by email and blah, 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 in terms of the actual operations. Then the submission is by the supplier, in this case, the non-VAT agent taxpayer, which is with everybody else, now comes in. You need to file in by the 18th. Okay, so between this time, by the time you are doing your return, you at least already have your VAT return. It doesn't deal with the issue of you already have your withholding tax certificate, because that withholding VAT certificate, because it shows you that that money has been paid to your account, because it's been claimed on from the other side. So you have remitted it. And then, but it doesn't deal with the issue of what do I now do with the input that I have. That's a separate issue. But for me, that happens, then we say, okay, the money has gone in. But now let's look at what actually happens in practice. And it could be very valid reasons. I mean, the trigger for the withholding VAT certificate is the claim by the agent. They've got a process. They could be, for whatever reason, they've not captured it. Or like Jetty said, they decide they can still claim it within 90 days. Right? So if they decide to claim that invoice after 90 days, which means it won't appear on my account. So the withholding tax certificate won't be triggered. Therefore, I won't be able to claim it. Now that leaves a liability on my account, because I'm just going to pay the difference. I will have computed and said, look, this one was withheld. I'll pay the difference. But the system has been made such that it doesn't recognize it until the certificate comes. So it still sits on my account. And like JT said, which has now other implications. Penalties coming, coming through, even as you are trying to resolve it, and even just reconciling this issue with the ZRA is such a daunting task, because now you now start, and some of it is even historical. You now start going, no, on this transaction, and meanwhile business has to go on. And all of these have got impact on the issue of the TCC. And we now know that without a TCC, you can't do business in Zambia. It's just too costly. So we have all of these compliance issues, which now have an impact just because of this same position. And that's why, for me, there has to be a solution. And where the ZRA comes on board to help with this. So now, just coming to the delay, just what the impact of the delay in the TCC has, I mean, in having the certificate has. The first thing is for you having to deal with the interest that accrues whenever you deal with the whenever the withholding VAT certificate comes through, you now have, again, it's your responsibility for you to go and engage with the ZRA and engage them in terms of having the interest and the penalties waived, which is also a legal process because it has rules. There are certain things that they can do and there are certain things that they can't do. And one of the things that they have within that, and this is coming straight from a taxpayer, is that in some experience that we've had, one of the issues we have with applying for penalties time and again is the issue of second offender. So I supplied my withholding VAT certificate was delayed. I went in, it triggered interest and penalties, which I applied for a waiver for, and they were waived. I supplied another TCC, another withholding certificate is delayed. It triggers a liability, which when the certificate is done, triggers another. Whenever I go to do that, the system, their system now treats me as a second offender, and therefore won't give me the full benefit of the waiver that I should have. At least that's been the experience. I mean, other than, you know, going into so many other lobbying and things like that. And this is why I even see that our brothers who are implementing this, I'm sure even their hands are tied because the rules say I can't continue asking for waivers because that is going to, you know, so their authority is diminished. And then which just creates, so it all creates a very, very expensive compliance process. One, I need to make sure that I'm watching out for those emails coming so that immediately I notice that my withholding VAT is not has not been triggered. I now need to start engaging. And the way it has been, the ZRA doesn't even want to get involved. They want you to go to your customer and tell them what's happened. Can we please make sure what's happened with my withholding VAT? And they want you to resolve it. So for me, that's the main thing. Yeah, like now with Smart Invoice, surely shouldn't we move this? Shouldn't we move this away from waiting to trigger the withholding VAT certificate from when the client claims? Because the taxpayer has got no control. You know, we are depending on the effectiveness of the operational procedures that the agent has. We are depending on the tax planning and the organization of the withholding VAT agent. Why not give the power back to the taxpayer, the responsibility, by linking it to the Smart Invoice? Immediately the Smart Invoice is raised, I think that's where they should link the withholding VAT certificate. It doesn't reduce the issue of the imbalance, but at least in the short term, it helps in terms of how the management, the compliance cost of always engaging with ZRA in terms of reconciling the account. For me, I've had clients miss out on key tenders. JT brought this up. So what happened here was this, because of unresolved withholding VAT certificates sitting on the account, and therefore the liabilities and the evidence was all there, and then the liability was sitting on the account, the ZRA, again, which is rightfully within their rights, they could not give a full year TCC. They could only give a conditional, and the conditional only goes quarter by quarter. And we were also told that it cannot be issued when there is an active one, which even if it has 1 day to expire, they can't roll it over. It has to expire first before they can issue the new one. Now we have a scenario where a transaction has to happen. It was a bid. A bid has to happen in the first week, first few days of the following month. And the TCC is expiring on the, on this side of the month, on the last day of this month. And the bid requires that you need a TCC, a valid TCC. And what did the client do? We said, okay, let's put some explanation in there, engage ZRA, the officers and everybody else. Everybody just told us, unfortunately, there's nothing we can do. We can only reissue this when it is. And I don't know what happened. There could have been some holidays. It could have been July or thereabout. So we couldn't get the TCC on the first day. Immediately it expired. We couldn't get the conditional one because, the normal one just appears automatically. But the conditional one has to go through internal approvals within ZRA. We get to, and this was a big bid, a business-changing bid for a client. We put in, we said, let's take a chance, let's just put it in. We can forward some of this documentation later, maybe when they query it. It's unfortunate that they never queried. All they did was to declare that bid non-responsive on account of an expired TCC. So I think these are some of the considerations that some of these decisions should be looking at. So yes, they've made the decision and it's well within their powers. We accept it as an authority and we probably even understand why they would want to do it. But then what are they giving the taxpayer? How are they going to resolve this issue of the withholding tax certificate to make sure that every 16th it actually is there? And should it not be there, what are the dispensations should they have? They should be able to create some dispensation that should deal with this risk and say, look, therefore a taxpayer should not be whenever they come and apply for penalties, whenever they bring some of these things up, simplify the process for resolving outstanding withholding VAT certificates. But for me, the short-term solution is just link it to a smart invoice, and immediately a smart invoice is raised, let the certificate be linked to that, so that that's it. Especially if it's to these suppliers, to these agents. If it's a supply to these agents, immediately it happens. Yeah, and then the other thing is, let's also see how. I know it's a cash problem, and everybody else is working through it, but they also need to prioritize these growing businesses in terms of unlocking the working capital trap that comes with input, which is which is delayed in terms of repayment.
Excellent. That to me looks like a supplier is totally disadvantaged in this particular equation, because even when you talk about the agent is only working for one principle. It's basically the ZRA in this particular equation and not the suppliers. Maybe Jetty, you can add to what CD has mentioned. What sort of options do the suppliers have in this particular equation? What is it that the suppliers can do? What are some of the interventions? What are some of the initiatives they can pursue? Because this is only going to go one direction. The supplier is going to get choked and choked and choked. And there's the way it's looking, the experience with the VAT refunds, the processes that CD has mentioned without using smart invoicing. I think it can only go one way. The working capital trap is going to be big for the for an average, supplier, even a big supplier, what interventions can the businesses pursue in order to possibly correct this situation? Jetty, and maybe City as well.
All right.
Yeah,
Thank you. Thank you, City. Thank you, Arake. So just to add also, so so the two side of things here. One, there's a refund side of things, and the second one is on the certificates, on the liabilities that are pending on the account as a result of the delayed certificate. So what would happen then is that just to keep track or to remain consistent, what would then be required to be done by the supplier obviously is to maintain a register of this transaction with these mines or these agents. In that register, obviously, you have to indicate the invoice number, because depending with the number of transactions that you have, you may lose track. But if you have a register where you indicate the invoice number, you get the customer name, the VAT withheld, and then the date that invoice was issued and the period in which it relates to. Then when you have that schedule, obviously, ZRA has obviously put up a team that is responsible to help with the reconciliation. Of course, the reconciliation has been a slow process because along the way, some other agents that were appointed then may have lost the invoice and they may not have even made those declarations. So when you submit those, then ZRA would look at your schedule and check. And that is now what comes in now is the issue of reconciliation, because once you maintain your records, then now you push in for the reconciliation. But then what has been a challenge also is that there's been a pushback, because what normally happens is that even when you submit those things, I remember in one scenario where I was sent back to one of these government agencies under the previous arrangement. Luckily, some of these institutions have not been included, but for the mines, obviously, we expect that the process could be quicker, so that by the time when they receive these invoices, by the 16th of the subsequent month, if the supplier has made their submission of those invoices on time, they'll be able to declare them and obviously get the benefit. But should they not be able to have received the certificate, obviously the issue of maintaining those records are quite critical. And then when you engage the guys internally, and you, as earlier alluded to, that a TCC is conditional based, then it means for the moment you can show that reconciliation. I have also interacted with some of the officers that have been very collaborative, in the sense that when you give them that information, they're able to do the reconciliation with you and immediately issue a TCC. But the challenge I think that comes in is where, because this tax clearance is condition-based, instances where you have to push in a tender, maybe the deadline for the tender is maybe in the next month, first week of the coming month. It becomes a challenge where a deadline is on the weekend and the submitting your tender before the weekend. So what now happens is that you have to wait for Monday, for instance, for it to be approved. So obviously, in as much as you engage these guys in time, they can't give you the tax clearance immediately, because they have to wait for it to expire. That's when they can reissue that tax clearance. And then from the ZRA point of view, just to backrow, or rather to rely on the taxpayer charter, I think they have committed in principle that the refund will be paid within 90-day cycle. And that's a statement that even when you're walking into the office, or if you search around, the first thing you'll see that there's a commitment to pay a particular refund within 90 days from the date of lodgement. But we have not seen that coming up. Obviously, a number of issues that have come in terms of obviously reference to cash flow challenges, funding, and everything, because everything goes through a central pool, and then a disbursement is made to them, then upon which now they can make a payment. And even those payments are selection based. It's not mandatory that we pay everyone in that pool. It's obviously they'll look at the historical ones, those that have been on the list for a long period, the area periods they pay, that's when now they can. So you find that where a refund is current, you may not receive it maybe in the next 90 days. You have to wait for the ones that are on the schedule for some maybe prior 90 days or so. But what we've seen also is that in terms of support with getting the tax clearance, we have in certain instances where tax clearance have been given, But the bottom line still remains that yes, a tax clearance would have been given to me, but I have not received the payment from this particular from the mine, because the mine has withheld, and obviously I'm expecting to claim that refund from ZRA so that I can onward pay to my supplier of these inputs in my production process. So at the end of the day, I still remain out of pocket. So that's a major problem that still remains more of a thorn for most of the suppliers in the process. Because yes, in as much as the tax clearance can be given to me, but much as if I've not received the money, where am I going to get the money to pay? Because I may have bought these products on credit as well. So meaning I have to finance that VAT which have not yet been paid, which has been originally withheld at source. So what would be required just in summary is that you maintain a register, and then for some of the suppliers who are categorized as large taxpayers, there are key account managers that ZRA has designated for them. So obviously is to engage direct with your account manager so that you can consistently reconcile. But the challenge that has been there is for the medium taxpayers, because those have got no allocated account manager. So it means you just sit in a pool. Whoever picks up your case is the one that attends to. So those are some of the administrative challenges that we see. And what we expect is that if ZRA can look at that part in terms of creating a dedicated team, yes, there is a team that is currently looking at that, but we need a more proactive team that can support this process. I think so.
Excellent, JT. CD, that is from the process side on what businesses can do. What about on the advocate side? What can businesses do at this stage? Because clearly, smart invoicing was introduced to ensure compliance with the tax authorities and efficiency. This too looks like create the collection of taxes by authorities. But what is it that the businesses can do on their side? Are there any ideas you can throw around, you can propose to the businesses?
Yeah. No, absolutely. This is a process that will, with you, of course, leading it, we'll do an engagement. But as businesses, through our Chamber of Commerce and our there's power in numbers. I think we need to have the voice heard. I am a great believer that ZRA has serious professionals, and all these decisions that they make them, the intention is good, but of course they could have missed one or two implications, and so it's an issue of engagement. So and particularly here, this one, because it immediately affects the Chamber of Commerce, so we'll reach out. We are members to the two key ones. I think as a chamber, as a business, let's get together, let's have an engagement with the ZRA so that at least we can iron out some of these issues, which may have been blind spots for them. But we know, we have lived with them, and we know what impact this would have. So for me, that's, other than from what JT mentioned, at a tactical level, this is it. This is the hand we've been dealt with. So let's find ways to deal with it. And it will also be, so at an individual level, let's have that engagement. And it's all by being organized in terms of your records. One, maintaining that register so that at any point in time, you are able to, to very easily engage with the reconciliation team in terms of the ZRA. For me, the other one is to be extremely alert with watching that 16th deadline, because immediately the 16th deadline has passed and you have not received your withholding VAT certificate, that's when you need to start the whole process of engagement, so that you shorten the period instead of waiting until maybe there's a problem on the account and things like that. So that's at a tactical level. So there's that. And of course, there's the issue of, for those large taxpayers, privilege to have an account manager. Take some time for us, the clients that are in our portfolio. Those are the people we have a relationship with. And we manage this because we know it sits at the heart of their business. So we manage this very, very carefully. We touch point with the account managers to ensure that all of this is, we give them a peace of mind. We give a peace of mind to our clients. And of course, we maintain that register so that whenever anything comes up, just today, some notice was sent to one of our clients, and the team jumped on it, and we're calling everybody else, escalating, making sure that it's all but resolved. And maybe Jetty will even confirm the status of that. But that's the only way it's the hand we've been dealt with. We need to deal with it at operational level. But that is not sustainable long term, because long term, this will just choke the growth. It will take away the value that is being created by SI 68, like within the same different arms, but because of different mandates, they'll be working counterproductive to unlocking because we believe that the working capital trap is indeed the biggest blocker in the short term to realize the SI 68 opportunity. So getting the working capital is hard enough, because and by the way, some of the clients, because tomorrow the TCC has expired today, but the following day, that's when I need to make a payment to my supplier. What do? I end up getting an overdraft, pay off the liability so that I'm given the TCC, so that then, I don't suffer advance tax, which is extremely punitive. So now you get to that point, and then, so now I'm completely out of pocket. So I've used, I've created a hardcore, because, ODs should really be used for things that are quickly going to come into money. Now I've used an OD to pay for something that is going to be paid back to me, in not so short a future. So all of these are the issues for me that we need to look out for. But coming down to it, as a group, through our associations, through our chamber, let's put our voices together. Let's engage with the ZRA. They are very, they can understand these issues, and then we can see how we can work together and streamline. At least, for me, like the issue of moving the certificate from being claimed by the agent to being linked to the smart invoice.
Smart invoice,
That should, in the short term, help a great deal as we deal with much more structural issues like the rate at which the refunds are happening.
Excellent. Jetty, we advised
so just to add on what CD was just mentioning, I think he brought out the issue of OD, which is more of a finance instrument. Unfortunately, CD, you may wish to note that even on that front, in raising finance, the directive which was given recently also is that a tax clearance is required when raising finance with financial institutions. So already, by virtue of not having a tax clearance, where you want to mitigate the exposure on the unreceived certificate, you rush to the bank to get the money. You find the bank also is demanding the certificate.
You need a TCC.
You have nowhere to go. Unfortunately, now
that's 22.
Now just squeezes you completely. All the options that you think, like, just out of frustration, let me just sort this out. Because I think I've interacted with a number of clients who have all the reality issues. They say, okay, I'm tired of this. I would rather just pay this liability and move on. And then probably when it comes, I will sort it out. And these are genuine taxpayers who are committed to fulfill their obligations. But sadly, a number of registration requirements are required in these institutions, like in the case of blazing finance. A TCC is required, so it becomes a double-edged kind of an arrangement.
Excellent, excellent. Yeah, very exciting topic. Sidi, you had something to add?
No. I
To
mean,
what?
I think for me, it's just that just to let everybody know, so that they are not blindsided. That because it mainly came in as just as an advert, as a note, I think, a notice, which then it didn't have quite a lot of explanation, other than just saying this is the scenario in terms of, and that it's effective 1st of June 2026. So so
We're deep into it
operationally,
as we
I
speak.
think we
Yeah.
need to be ready, and there are a lot of clients that are quite nervous at the moment because they are now thinking, oh my God, what's going to happen here? So for me, there's the structural one, which in the end really has to be looked at, and it can only be dealt with by reducing the input refund arrears, is the mismatch that is being created by collecting this whole amount upfront, and then leaving the supplier with input VAT, for which, on a cash flow basis, he's got nothing to offset against, other than to have it as a refund.
Excellent. So yeah, listening to you, a lot of knowledge, reservoir of knowledge on tax matters. That's pretty much what we offer as a service as Moore CFS Zambia. And I'm sure the people listening to us can get in touch with us on not only this particular subject matter, but any other taxation matters that are burning, that are on their books, that are bothering them. I think they can do the heavy lifting and give those challenges to us. That's why JT is here. That's why CD, with years of experience, is a senior partner. But before I let the two of you go, there is a small matter that we have to deal with, but it's the biggest matter. Perhaps it is the good news that happened, CD. We got finally the onboarding from Moore Global, and now we are in the big pool, big group as Moore CFS Zambia. It was in the press earlier last week, but you may want to weigh in and share with our, followers, the people who follow us on this podcast, what this means. Does it change anything? Maybe you can weigh in on the onboarding by Moore Global.
Excellent. This is very, very exciting. And, for us, in fact, as in terms of what our mission has been, it's been an issue of making sure that using local resource, we're able to bring affordable, world-class service to our clients. And we really focus on growing businesses as our passion, because we believe that's where the biggest value is. So it's been a long journey, but now we thought we were at the right time for us to increase our capacity in terms of our ability to serve our clients. So now we are part of a global network, and therefore the range, our capacity to service our clients is even much more. Nothing fundamentally at organizational level, nothing has really changed. It's still the same faces that are going to be seen. I mean, of course, the name has now changed from Client Focused Solutions Chartered Accountants. We're now Moore Zambia CFS. Yeah, it even sounds very nice. I must say, if I must say so myself. So we feel so privileged, but we did this for our clients, and indeed even for our staff, so that we can expose everyone to international standards. So all along, we've been operating based on a local benchmark. But now we know that we are at a level where we are able to deliver at a world-class basis. And what best way to do it other than being into a very, very progressive network like the More Global. And that's why we love it, and we feel very welcome. And we can already see quite a lot of opportunities for our clients that will come purely by being part of More Global. So that's the thing. In terms of the people, in terms of the only thing that will change is now we're going to step it up. We're now going to step it up because now we are standing on the shoulders of giants, and we're able to roll out world-class service on the world-class standard, to bring value to our clients. And we still remain very client focused. We still remain people who want to give a peace of mind to our, to our clients. We don't want them to worry about compliance issues. We don't want them to worry about all these other issues, withholding VAT, how it will impact them. We want to take all that burden away from them. And that's why in everything else that we do, we only want to do things that lessens the burden for the client in terms of that's why we now even going very big on bankability, where we want to make sure that we can package growing businesses and link them up to appropriate financial models and financing that can scale their growth. Thank you. So exciting times.
Excellent, CD, and indeed exciting times. I have to give credit to you, and Chikumbuso, Piri, managing partner, for driving the business to this level. It's not a mean achievement. It's a huge achievement. Of course, the entire team, leadership team, and the staff for the effort over the years. I am sure in the next couple of podcasts, we'll be able to talk about this development in a lot more detail for the benefit of our clients and would be, clients. But yeah, a huge achievement, and congratulations to through you and the managing partner to the team for the huge milestone.
Thank you. Absolutely. Absolutely.
Thank you. Ajeti, a comment on the development from your side?
Yeah, so from my end, I think I just concur with what CD has mentioned. It gives us more challenge as then now we are required to step up in terms of our service deliveries, because we wouldn't want to be in the network to be the one lagging behind. Obviously, we have to be over and above our execution and ensure that our clients' delivery are top notch. Because if we don't execute what already we've been executing, obviously we have a challenge in progressing. So ours is to make sure that the team has remained the same, but obviously in terms of knowledge sharing and meeting up certain technical side of things, we have a pool of knowledge where we can tap in and execute client commitments, which includes obviously bankability, take advantage of ISI 68, which then gives more of opportunities to mine suppliers, or rather citizen-led entities with minimum shareholding of 25%. So meaning that requires more support, and obviously with us, our commitment is to support our clients get the services that are required to ensure that they're not only do they get, so as they get their opportunity, we are also part of the process in ensuring that they are compliant, because that comes with also the compliance side of things. So obviously we come in also to support them. So we are more or less like sitting at both ends, at acquisition and also driving the process all the way to the conclusion of that particular project. So that's what we stand in, and we are committed to make sure that that is provided to our clients.
Excellent. Gentlemen, it's always exciting to be with you and to talk to you, especially Sidi, who has been my usual guest. Ajeti, you were awesome. You were, fantastic on your debut podcast. And Sidi, as usual, excellent. We'll talk to you again next week, when you come back on
absolutely.
the podcast.
No, the pleasure was all mine. Very excited. Thank you so much for everyone for having taken time to have this discussion.
Thank you.
And our clients, maybe RK, you can give out your number so that an email, so then they can get in touch with you. I mean, anybody that would want help in this space, we can always assist them.
Yeah, so I hope to be back
Excellent.
on
Thanks. And yeah, sure. You'll certainly be back. There's a lot of tax issues to talk about, and we'll certainly be back, calling you back on this podcast. You can get in touch with us, and my number is +260 95 000 3450. That's my WhatsApp number. I'll go 000 3450. And my email address is Reuben spelled REUBEN at Moore spelled MORE Zambia CFS as one word. Email again. My email address is Reuben at Moore Zambia CFS.co. I think I can stop the recording.
Excellent. Thank you very much. Over and out.